Hello, TP family. Welcome to the Trading Psychology Masterclass on YouTube Live. I am excited. I hope you're also excited for today's live stream. We have some exciting lineups coming up very, very soon. So make sure to avoid any distractions and take notes with pen and paper. And if you have not invited anyone up until now, please do invite someone to join the live right now because of the information that will be shared during this live. You don't want your other traders to miss out on this information. So without any further talking, let's go.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. Fix your mind, fix your trading.
Hello guys, I'm back again. So that was our little timer before we start the show. So before we begin, I would like to know where everyone is tuning in from. I want to read the comments to know where everyone is tuning in from. So let me know right now so that I can share where you are coming from or where you are right now watching us, whether in your bedroom, living room, wherever. Just let me know. Oh, we have Nigeria in the house. It's nice to meet you, Silas. I hope I'm pronouncing your name right. Let's go, people. Another Nigerian. I have another Nigerian, the Light World FX. It's nice to meet you. Another Nigerian from Anambra State. It's nice to meet you. We have Lagos, Nigeria. It's nice to meet all of you. We have Kenya. Nice to meet you too, Albert. We have another Nigeria. Oh, nice to meet you, Philip. I hope you truly enjoyed this live session today. Oh, I tried. Thank you. Thank you. Where's everyone tuning in from? We have 20 people watching us right now. I want to know where everyone is tuning in from. So let me know in the comment section. But do remember, as you are sharing where you are coming from or where you are tuning in from, you are also sharing the link, liking the video, commenting, so that more people will be able to join the live and benefit from the information. Oh, we have someone from Saudi Arabia. It's nice to meet you, Nathaniel. It's nice to meet you. And we have someone from Nigeria again, Abati. I hope I pronounced your name right. If I didn't, sorry about that. We have Larry from Kenya. It's so nice to meet everyone. Oh, finally, we have someone from Ghana, Ibrahim. Nice to meet you. Ivory Coast, Maverick. Pips. I know you are all about the Pips. Nice to meet you. We have David from Ghana. It's nice to meet you. And we have D from Nairobi, Kenya. We have Uganda, and we have Abuja, Nigeria. Nigeria again. And yeah, it's so nice to meet everyone here. So I'm going to stop here and then I'm going to bring on the next guest. We'll be right back.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. Fix your mind, fix your trading. Fix your mind, fix your trading.
Next up, we have market markup overview. So I'm just gonna introduce the next guest. His name is Albert, and he's gonna walk us through the market overview of what he's looking at next this coming week. So do pay attention because you could be getting your next trade idea from here.
Hello, everyone. This is Albert, and right now, let's dodge into the market review today. So we will show our screen today, and we will see what we are expecting on the market for next week. So basically, I'm looking at the GBP USD, and we can see it was in a bearish, but through last week, he actually rallied up, and right now, I'm looking for my price action to actually break through this or reject it. So basically, you can see on my screen on the daily time frame, I have my trading range, which is from here to here, and I'm expecting price to actually break through and actually go to the upside. If it didn't really break through it, it got rejected in the imbalance. That means we are going to continue the price to the downside. As we all know, price is actually respecting the trend line as well. So moving on to the 4 hour time frame, we could see that prices in the imbalance side. So before I will participate in this, I will actually wait for price to pull back to this zone first before I'll actually put a trade. If price come into this area and it creates break off a structure, then basically I will participate in the buy to the upside. So always remember, we have to wait for the confirmation, which is pullback, break of a structure, then the continuation to the upside. But if not, price actually goes downwards and it breaks through this support. When price break through this support, then I will be actually waiting for a break of a structure before participating in the sell to the downside. So we will just wait until market open, then we will see what will happen. Moving on with NZD USD. on the daily time frame, we could also see NZD USD was also in um, a bearish trend, but right now the trend has been broken and we are in a bullish right now. So before you participate in this as well, you need to wait for a pullback. So on the 4 minute time frame, we could see price break through this resistance, which is actually right now a support, and we are waiting for price to actually retrace back to either the 50% or the 61 or 78% fib, then we will actually wait for a break of structure over here. Then we will participate in the buy to the upside. If not, price might continue to the upside, and we will still wait for the break of a structure first. Then we will take this trade to the up of around 0.6184.47. But if not, and price continue to break this trend, if price break this trend like that's showing, that means we will just wait for a pullback to the support, which will be a resistance. Then we will anticipate in the downside to get our pips. Moving on to GBP JPY. GBP JPY actually rallied yesterday up whilst people were thinking it will actually sink, but it didn't, because I know that price is actually in the bullish trend. As we can see on the screen, it's in the bullish trend, and it came to visit or retest these support levels, which is our key level. So it came there and it jumped straight away. So I'm waiting for it to actually get to the point or a level of 198.863 before it gets back. But right now, when we go to the 4 hour time frame, we could see that price have broken through this structure or this resistance, which has become a support. So basically, we will wait for price to pull back into this zone before we anticipate to the upside, or we will take our fib. Then, if price actually takes the return or is bounced from this side or this zone, then we will wait until it gets to our 50 or 61 or 78 fib area before we will anticipate in the trade to the upside. Always remember, we wait for the confirmation before we enter. The confirmation is a pullback, a break of a structure, then the continuation to the upside. But in case it doesn't happen like that, because we are not in control of the market and the market can do anything it wants, we will actually wait for price to break this zone, which is a support as well, an interest zone, which I'm looking at. So when price break through it, I will wait for the break of a structure again before I will anticipate to the downside. So this is the end of our overview for next week. This is what we are expecting to see in the market. So we wait for price to actually open and we see the next step. I'm so happy that you are here with me and you saw what we are expecting in the market. So stay tuned for the next episode. Thanks.
Hi everyone. Did everyone understand what is going on right now with a chat analysis? Did anyone pick up anything from what Albert gave us? Let me know in the chat box right now before we move on to the next segment. Yes, yes, okay, yes, yes. I like to hear that. So, without any further talking, we're just going to move on to the next segment, which will be on news and fundamentals and risk management. So, please, 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 I know everyone on here is a trader, and if your risk management right now is not up to the bar, make sure you're paying attention to this session and do not be distracted. Yeah, do not be distracted. Really, really pay attention to this segment we're about to have. Okay, thank you.
Hello, wonderful people. Can you hear me? If you can hear me, just give me a thumbs up. Let's go. If you can hear me, just give me a thumbs up. Thumbs up, thumbs up. If you can hear me and see me, give me a thumbs up in there. I just want to confirm I'm live currently. Awesome. Okay. Thank you, David. All right. Hello, wonderful people out there. My name is Emmanuel Napo Ado. I'm popularly known in the trading space as Kema Trades. I'm sure, a lot of people in here are well aware of what I do and what I've been doing for the trading community. Today, I am only going to be introducing two main things, right? I'm going to talk about fundamentals coming into the new week, and then I'm also going to be talking about risk management. Specifically, I'm going to stress on edge, right? I see a lot of people in here from different countries. I'm glad that you're all here. I'm seeing Zimbabwe, I'm seeing Cameroon, Nigeria. I'm glad you're all here. You're welcome. Great initiative that Clifford Cheqona has put together. Bless him so much for that. Okay, let's get in on here. I have very little time to actually discuss this. Now, every single week, as a trader, I want you to do this. Go to a news trading platform, whatever platform it is. I like forexfactory.com. And whenever I go to forexfactory.com, what I do is, because I trade gold, right? Or I trade basically USD related pairs. So gold, GBP, USD, every pair that I trade currently has USD as a code currency or as a base currency, right? Now I go there and I check the news or the geopolitical events, the geopolitical happenstances, any data related that could actually affect the pairs that I'm trading, which is gold, and then like GBP USD. That is if I'm going to be trading any pair that has USD in there within that particular week. So I have I'm basically going to talk about the upcoming news data in the week. On Monday, most of you did not know, but we have USD bank holiday, right? We have a USD bank holiday. And one of the things that I tell a lot of people is whenever there's a bank holiday, two main things can happen. One, the market can be slow as hell. Very, very slow. And the second is the market could be really, really hysterical. Very, very fast, very, very liquid, right? And because I do not know which one market is going to pick at a particular point in time, I just stay clear of the market, right? I make the decision to stay clear of the market whenever there's a bank holiday that is related to the pair that I am trading in the market. Now, coming all the way to around 5 p.m., 17:00 GMT, that is relatively 1 UK time, 5 UK time, right? 5 p.m. UK time, we have President Trump speaking. And For those of you who have been in the market for a long time, whenever you hear Powell is going to be speaking, like you all get shivers all across, and then you are ready and sitting behind your PC. But if you were a trader during the period when Trump was actually the president of the United States of America, guys, you know that when Trump is about to speak is a whole historical market, right? To take a look at. And so that 5 p.m. UK time that Trump is actually taking the podium to actually speak, I think that there could be some reactions coming on. Like basically all pairs should be a lookout, right? All pairs. I'm going to be taking a look at gold because that is the pair that I'm trading, but all pairs should be a lookout for. I'll be getting. And Trump is actually speaking twice within this coming week. He's speaking on Monday and also speaking on Thursday, somewhere Thursday, right? Thursday, not 5 p.m., 4 p.m. on Thursday, Trump is speaking again. Now, one of the things that you must also mark out is this. Whenever you go to the forexfactory.com or any news data platform relating to trading, you want to look out for the kind of folders that you want to be interested in. We have orange folders, we have red folders. The red folders are the most important ones. Those are the ones that I usually imprint my thought upon. Why? Because they carry power, because those are the ones that actually have the highest impact on the market. And so if you see a red folder, most probably, usually we have the effect coming in on the market really hard as compared to the yellow folder and then the orange folder, right? The yellow folders are the least impactful on the market. So I don't even have them, like on my display list. I only look out for the orange folders and the red folders. On Tuesday, we have some pound news coming in at 7 a.m. UK time, right? And then we have all day being the WEF annual meetings, right? And then finally, I'm going to be talking about the Canadian dollar. We have Canadian CPI yearly coming in, and then trim CPI also coming in at 1:30 UK time on Tuesday. Basically on Wednesday, we have no proper news data that could affect the market. And then Friday is when usually we have some, action coming in on the market. On Friday, we have 9:30 UK time flash manufacturing PMI, and then we have around 2:45 flash manufacturing PMI for the USD. So anytime, which is 9:30, we have for the pound, and then around 2:45 we have for the USD. Based on the fact that these are red folders, we might see some little disruptions in there. If you want the full data, you can go on forexfactory.com and you can be able to just click on calendar and you can be able to view all the news data that is available for us, coming into the week. The week is going to be an interesting one. Albert has already talked about some of the pairs that we are actually looking out for some action on, probable speculations on price movements towards the upside or towards the downside on different pairs. I think that is going to be a great week. We are going to see some price action coming in there. But Monday, I'm off the action. I'm going to come into the market Tuesday all the way to Friday, trading the market. Now, let me just switch you from here, from the fundamentals, and take you right into edge, right? Now, basically, what is edge? Guys, 80 to 90% of retail traders lose their capital within the first 3 months of trading. Previously, that was the norm, right? Today, it even goes beyond that, right? It even goes beyond that because today, people fund today and lose the entire capital today. People fund today and lose the entire capital in 1 week. And the question is, why is it that 80 to 90% of retail traders are making it in the market and only 1% of retail traders, or only about 2% of retail traders are actually killing it out there? Somebody might say the market makers are after us. I don't disagree with that entirely, because sometimes there are some manipulations that come in for retail traders, and we should be on the lookout for that. So you see, if you check the Bible, right? I'm a Christian, guys. So if you check the Bible, it says that the weapons will be fashioned against you, but they will not what? They will not prosper. So it means that definitely you're going to have the weapons fashioned against you. It means they are going to be formed against you. They are going to come against you, but they will not prosper. It means that there's supposed to be a shield. Okay, where is that shield supposed to come from, right? Probably, if you are talking about Christianity, if you are talking about religion, if you are talking about everything else, you should be shielded by the God that created the universe, the God that we serve, right? at the end of the day. But there's some work that is supposed to come from you as well. You need to pray, you need to fast, and then do all those things. Coming into the market, bringing you back right here, right? I want you to understand that as much as we are in the market, and then we know of some manipulations in the market, and it could get anybody at any time, there are certain things that you can put in place that will prevent you from actually being a victim of those manipulations. So at the end of the day, you can clearly come into the market peacefully, pick your trades, make your profit, go out of the market. Nobody said there are not going to be any losses. There are definitely going to be losses, but with your control. Forex is one of the areas that you have total control of everything. How much you put in your trading account, how much you risk on a particular trade. You can put in $1,000 and risk only $5 on a trade. You decide. So if you have total control of all those things and you still lose your trading account, then it means that you are the one who is to blame, and not the market maker, not the individuals who made MT4 or MT5, not the people who are actually making the market. In fact, a market maker only generates business with his clients, and the clients are you and I, the retail traders. So by creating patterns on the chart that we can recognize, most of us using our own strategies based on that technical, happenstances to trade the market. But listen to this. You are of no value to the dealer or market maker if he cannot get you into the market at specific times when manipulations are supposed to go on. It means that you, on the other part, need to work at it, right? So why do most traders fail? Short-term mindset. Most of you come in here with a short-term mindset. You see all the cars, you see all the stuff that people are driving out there, you see all the nice things that people are getting out there, and then you don't ask the question, how long did this person spend on the craft in order to be able to get those things? You just get in there and you want those things by next week. And so you bring your $1,000, you bring your $500 into the market, and you start doing things that people have been in the market for 4 years, 5 years are doing. Someone says, I'm flipping. Flipping is for people who have extra money in their bank account. You have $100 only. You come into the market and then you say that you are going to flip that $100. You lose it and you have to go back to the drawing board and get some money and come back into the market again. And if you don't take care, it's going to be a cycle, right? Lack of market knowledge. You come in here, you don't get the requisite understanding of how the market works. People tell you that, it's all about how to make money in the market, not or neglecting the factor that you also have to learn the dynamics of keeping the money that you brought into the market. And so you come into the market to learn how to make money, but you forget to learn how to keep the money that you brought into the market. And then you throw it all away and you go and bring another part again in order to come start making money or probably make back the one that you lost. And it's a cycle that goes roller coaster all over again, right? Emotional trading decisions. Some of you trade the market based on emotions. You have no requisite understanding. You have no strategy to approach the market. You just basically see market spike up, and based on that spike, you just join in, right? All these are faults that get traders losing. Competitive markets, with professionals, over leveraging. Some of you come into the market with $100, and because you want to flip that account, you end up using lot sizes that are outrageous to that particular account, that $100 account. I'm not saying that you cannot use big lot sizes for an account, but the mindset behind trading that account is much important. There are people who come into the market and say, I want to flip this $100. Because you want to flip that $100, cool. That is the mindset that you have. So you can do whatever you want. But if you came in here to learn how to do this professionally and not lose that capital that you came in with, there is a dynamic that you need to take. And over leveraging is certainly not one of them. No stop orders. I had a conversation with someone who told me, I don't put stop orders on my trades because I think that the market makers actually mark out where stop losses are and come all the way to pick out stop losses. I was like, what? And this is someone who is a successful trader, right? At the end of the day, down the line, about 2 to 3 weeks later, this guy loses a very huge amount of money on the market. Guess who he calls first? Kema. He says, bro, I just lost this huge sum of money. Then I came in to advise and then say, bro, I told you the last time that you should start using, stop losses on your trade. It is better to anticipate how much you're going to lose on a capital, because not putting a stop order on your account is also an order for the broker. What is this order you are giving to the broker? You are giving the order to the broker that whatever trade I'm in currently, I am putting my entire capital on that particular trade. It means if you have $1,000 in that trading account and you place the trade without a stop loss, the broker is not liable to you losing the entire account, and you can't hold them responsible, because it is an order that you give to them, right? Averaging your losses on the market, you need to start averaging your profits rather than averaging your losses. What is averaging losses? There are individuals who place trades in the market, and when trades go against them, they take off their stop loss and start adding to positions. You should take a look at that, because it is not something that would help you. Now let's move on. What are some of the resultant effects that these practices can actually get a trader to come into? We have capital, loss, emotional stress, inconsistent performance, and then loss of confidence. Now, take a look at this for a moment, right? This is actually a ripple effect. When we say a ripple effect, when you stand by a riverside and you throw a stone into the water, you see those rings that start where the stone falls, right? It keeps on going and gets wider and wider. Those who have been to river banks and then thrown stones into water, right? You basically see that effect. It's what we call the ripple effect. Now, it starts from the capital loss. Capital loss is not wrong. If I lose my capital on the market, right? If I lose a part of the capital, now capital loss is wrong, but a part of the capital that you have actually anticipated to lose on the market, you should be able to understand that this is how much I'm losing on the market. So if you're losing your entire capital on the market, that is wrong. Losing your entire capital on the market is what will cause you extra emotional stress, because now you are angry, you are anxious, you want to make your money back. At the end of the day, there's so much that is happening, that is going on. It breeds inconsistent performance. You get what I mean? Inconsistent performance, because now you want to make that money that you lost back. And then at the end of the day, because you are trying so hard, you get to lose extra money. Now, there's one particular book in here that I read. I think a lot of you have already read it. The Richest Man in Babylon. It explains some, very interesting thing. It says you are passing by a riverbank, right? And then you decide that every single day I pass by, I'll throw one stone into the river. If you do that consistently every day, that is your practice. That is your strategy. I'll place wherever it falls. I don't care. I'll throw one stone into the river. If you miss one day, it says, do not come back the next day thinking that I am going to cast 2 stones into the river because I want to make up for the previous one. No. What you stated was not that you will be casting this. You said that you'll be casting 1 stone a day. So if you missed one day, we are in a new day and you need to cast 1 stone and you are basically done with it. Now, the moment you start saying that I want to cast 2 stones, then you miss another day. You say I want to cast 3 stones. It becomes difficult and difficult, right? People say I want to make $50 every single day. They miss out on this day, and the next day they come back and say, I want to make back the 50 I made yesterday, and then today I'll make today's $50 in addition to it. So then what happens is today, if you lose $50, the next day you come back and say, I want to make back the 50 and then the other 50, and then today I'll make. So it means today's tax is gonna have you making $150 in the market, which is relatively, beyond your capacity, or maybe beyond your capacity in that moment. At the end of the day, it will cause you to have those inconsistent performance, whereby you are not able to do what you said you are going to be doing at the beginning. You are not able to follow that particular pattern that will bring you the edge. Now, what is an edge? An edge is basically one thing happening over another. It is basically like muscle, right? It's like human beings having muscle. Now, what is muscle? Muscle, or how is muscle built? Muscle is, built by repeatedly lifting things that are being designed to weigh us down, right? So at the end of the day, if muscle is repeatedly built by lifting things that are, designed to weigh us down, edge is basically that particular thing that is built or created or grown by repeatedly doing the exact things that you said you are going to be doing. I hope you understand what I mean, right? So that is how it goes. So you build the edge by repeatedly, you first of all create that particular approach to the market, which is a strategy. Then you build that psychology. Then you tell yourself that, hey, this is what I'm going to be doing. Trust me, if you follow a particular pattern, a particular discipline for a long period of time, the edge will be built to a certain extent that you would need so much to look out for the direction of the market than how the cognitive, is going to be. If I enter a trade, how am I going to feel? How am I going to think? No. If you have $1,000 account and then you enter 0.05 with a stop loss, and then you are actually agreeing with how much you are losing on that $1,000. Let's say you are losing $50. You are comfortable. You can leave that desk and walk around and come back later. Am I right? There's no need to run back to the desk. What is happening? What is happening? No, you know how much you are losing. So whatever happens at the end of the day, it's $50 I'm losing. And if I'm making it, I'm making probably, like 1:4 raise to reward. So I understand what I've actually taken myself into. And so there's no need to keep rushing back. So you see that the psychological aspect where an individual, puts a lot of stress on will gradually reduce, and then edge, gradually what increases over the other part of it, right? Now let's go into this area. Individuals just need to have patience. Now let me talk about this part. What is risk management? Now, some people will basically say, oh, forex is too risky, it's not for me, and then all right. I basically say this. What in this world does not have risk in there? When you are driving, you are risking your life. You are risking, accidents. You are risking driving off a cliff, right? Cliff, sorry for using your name, but, right? You're driving and then you are risking of driving off a cliff. You could sleep behind the wheels. That is the risk, but you did it anyway. I hope you understand. So there is risk involved, but you did it anyway. At the end of the day, if you are not even driving and someone else is driving you, you are building, that capacity to go sit in someone else's car. You don't know whether the person has their license, whether the person knows how to drive, whether the person used protocol in order to acquire their license in the first place. They just said they are a trotro driver, or they are a taxi driver, or they are Uber driver, and you jumped in the car, you did not ask any questions, and they are going. That is a risk. Wherever you're going, you are putting your life, in the hands of someone that you do not know anything about. Nobody stops an Uber and says, let me see your license first before I enter into the car. So at the end of the day, there is risk involved in everything. Now, what we must learn how to do is the management of the risk that comes along with all things. So if I'm driving, how do I manage the risk that comes along with driving? How do I not collide into another person's vehicle? How do I make sure that I don't drive off a cliff? I need to be very awake. I need to be well rested before I drive. I don't need to drink before I drive. That is you managing a risk. So at the end of the day, the process of identifying, assessing, and controlling expected and unexpected. So you see, I say expected and unexpected. So there could be expected, and there is also the unexpected. My dad told me something interesting. He says, when you are driving, you think for yourself and the other, excuse me to say, stupid driver that you do not know what exactly they are doing. So you are on the way. You know what the expectation is of you driving. But someone else driving, you don't have the expectation of that individual's driving. So they could just come and crash into you. And it happens over and over. So basically controlling the expected and unexpected situation involving exposure to danger. So when we come to the market, we are asking ourselves, what are the risks? What are the dangers in the market? And that's basically what I stated earlier on. Losing your capital, having emotional stress, inconsistent performances, loss of confidence. How do you get it? So at the end of the day, knowing these things or these dangers that come along with trading, now what do we do in order to manage the situation so that we don't lose our capital, so that we don't basically, just come in there and have that kind of emotional roller coaster that a lot of people have in this market? How do I just get comfortable with trading? It's basically understanding you and whatever you are bringing into the market. I'll be getting. So basically, this is how I do this for a lot of people. I call this the MDF. Those who know MDF is a type of wood. I don't know. They call it MDF wood. I don't know why they call it MDF wood. But that's the what? That's the niche that I picked in there. Magnitude, duration, frequency. Magnitude, how big? We are asking questions over here. How big are your lot sizes in the market relative to the trading account that you have? How big is your trading account? How big are your losses? How big are your wins? We are just asking how big. Then we talk about duration. How long do you have, consistently profitability? How long do you have that profits going for? If you are winning, how long does it take? If you are losing, how long does it take? We are asking questions because we want to make a risk assessment so that if you are losing too much, we know exactly what to do. If you are winning so much, even if you are winning so much, you can have euphoria. I'll begin. I think my time is getting closer, right? And then finally, frequency. Frequency. How often can we do this? How often can we do this? How often can we keep winning in the market? How can we keep the wins going? I'll be getting. How often does the losses come? So that we know exactly where to tackle. And then finally, I'm going to talk about this area. Okay, so we know about the risk and then all the things. Okay, the risk assessment, this is what we are basically, these are the questions that we are going to ask ourselves. Now, how do we tackle these areas? So I'm basically brushing on the surface of these. We have reduction, avoidance, sharing, transference, and acceptance. These are the basic, risk response that I have stated on here. I call them the RASTA. You can see RASTA, right? Reduction, avoidance, sharing, transference, and then acceptance. Some of you need to just reduce the lot sizes that you use in the market, and that psychological cry that you have, and that oh my god, I don't know what to do, will just basically end. Some of you just need to avoid certain kind of pests. Some of you just need to stop trading gold and trade Euro USD, GBP USD. But you keep saying that it doesn't travel so fast, and you are still in that particular area that keeps on killing you. Some of you just need to share your risk. Probably let me just reduce the lot size on gold and just try a different pair. I'm seeing that price has actually aligned with my criteria on Euro USD. Why not pick that as well and let me just divide. If I hit a loss on gold, basically Euro USD can do me some good and then make some profit along the way. Some of you need to transfer the risk to other people. That is where individuals like taking signals. So in the closed platform, for instance, we keep on giving, trades right out, and individuals enjoy those trades. Basically, that is what transference of a risk. You have just come back out of the chart and you're saying someone else should do the analysis, someone else should do the trade course. But it does not mean that you are safe, because you are the one going to be placing the trade. You are the one going to be having the emotional roller coaster. The individual who has given the trade is not going to be going through the same, emotional roller coaster. And that is why a lot of people end up calling different expert names, because they do not understand that strategy is basically a system that has been developed, and it takes 10% of the entirety of trading, mastery. 90%, basically 90% goes to psychology, and that is the area that you nurture. So I'm going to end with this. There are two areas that you need to look out for. There is the fruit of the spirit, and there is the gift of the spirit. The gift of the spirit is basically me bestowing upon you a strategy, a system developed, saying that, okay, Kema, this is how I approach the market. I'm willing to teach you this and this and that is what I look out for before entering a trade. I'll be getting. That is gift of the spirit. I'm giving you a gift. I'm giving you my hard earned, my 5 years of sitting in the market consistently practicing before even 3 years of profitability, my 8 years of staying into the market. I'm giving you that, so that you do not have to spend probably 8 years to become profitable. That is gift of the spirit. Now, when it comes to the fruit of the spirit, fruit is not, you plant, you nurture. I'll be getting patience on the market. Patience on the market, mental fortitude, building resilience, those things, they don't give. I cannot give it to you. I'm giving you my resilience. It does not happen, right? So basically, I'm going to end with this. Guys, a lot of the mistakes that we do on the market does not actually happen on the market. It happens with us as individuals. And it is time for us to be able to check ourselves and check our mentality and check our mindsets before we come back into the market again. My name is Emmanuel Napo Ado. People call me Kema Trades. And this has been a wonderful session with you all. Love you all, guys. All right, over to you, Denise.
If you are a trader and you are listening to me, before you step into the market today, let me remind you of one powerful truth. Your mind determines your reality. You see, success in trading, just like in life, starts with what you believe about yourself and your abilities. If you think you are weak, you will crumble under pressure. If you think you are destined to lose, you will miss every opportunity to win. But if you believe you are strong, focused, and led by wisdom, then no obstacle can stop you. And so today, I invite you to do something simple, yet life changing. Renew your mind.
I was just at the backstage, and bro, I was just enjoying your live session. Like I don't know what to say, man. Like it was an amazing session, to be honest. I loved every bit of it. I now know this is God's plan. First of all, guys, I want us to put in the comment section and thank Kema. This guy has been more than a friend to me from last year, even into this year as well. Let's just say thank you to Kema. And if you guys want him to come back again and again and again, right now, officially, Kems, you are part of the TP family. I think you've passed the TP test. So officially right now, we consider you as part of our family. And we genuinely really appreciate you guys. Before we go into the psychology segment, I have something very interesting for us to learn today. But I want to take the opportunity to let you guys understand what we are doing here. I don't take this credit for this lineup at all. I give all the glory to God. He gave the idea of how we should structure the whole masterclass for traders to benefit. And so if I don't say thank you to God for what he is doing, then I'm not giving credit to where credit is due. Secondly, I want to thank Kema. I want to thank Albert. I want to thank Shells. I want to thank the whole team for everyone and everything that they are doing. Guys, this is going to be the new structure of this masterclass. Every single week, it's not just going to be Cliff Cheqona. Now, why this initiative? The reason being is because people keep on asking me, Kema, you are the studio, and I know you can hear me. And people keep on asking me, they're saying, Cliff, yeah, okay, psychology is great, but what about our edge? But I don't want to teach the edge. I don't want to be the only person that teaches everything. It is just the truth. And so, I sat down one day, I went to church, I will never forget, and the idea came, and I heard in my spirit that I should structure TP masterclass or the masterclass in a way that people will have a holistic structure. So if you guys saw it, definitely there is a welcoming structure in there that we welcome people to this event. That was the beginning of the whole entire event. Secondly, there was a markup overview whereby you guys can copy the markup, and then at the end of the day, all right, you can make decisions with that. And then we will come back later on the following week and we can share and so on and so forth. Now, secondly, as well, or thirdly, Kema came in with fundamentals and risk management. But from what I'm thinking, guys, I think we're going to borrow Kema's whole entire knowledge about edge, and we're going to call that segment Fundamentals and Trading Edge, so that this whole entire masterclass will be a holistic structure of the whole entire approach. Now, welcome to Trading Psychology segment. What we're going to be learning today is quite very interesting. But before that, I want you guys to know there is one more segment which will be coming up every single week as well. And it's called the book review segment. Can we bring up the flyer up on the screen so that I can let people understand quickly? So this month, our book of the month is called The Psychology of Money. Today, we are not, okay, I can see from the studio, Kema is showing me that book. He has it. It's going to be interesting. So this month, we are going to be reading Psychology of Money. And what we are going to be doing every single week is that we are going to have a 5 to 10 minutes segment whereby we review the whole entire chapters, not all of them, maybe 2 or 3 chapters, to bring light out of the book to help people who have difficulty in building the habit of reading. Now, I didn't want this whole entire event to be about Cliff, and I don't want that. And so I thank God that this is the structure that we are going on now. Now, what we are going to be doing today is quite very simple, guys. As you guys already know, same thing. You had your book and your pen. for the risk management or the edge segment. I want you to have your book and your pen also for the psychology session so that we can take it out from there. Today, we are talking about something very interesting, and I want you to write it down. The topic for today, which will also be the thumbnail so that you can always come back again to see this, is the real truth about trading psychology. That is a title. Please write it down. The real truth about trading psychology. The real truth about trading psychology. I'm going to repeat it again. The real truth about trading psychology. Cliff, what are you about to say today? Nothing. Just listen. You see, a lot of people has not gotten a conviction yet. For example, when I was listening to Kem's, whatever that he said, there was one thing that struck me a lot, even as I was listening to him. And he was talking about how he said, you need to take responsibility, that at some point you need to understand the problem is you. And when he said that, I said, ouch. People don't want to hear that. I said, ouch. Like, that is the truth. You need to accept the fact that at some point the problem is you. And one thing that you need to be able to understand is that psychology is beyond an abstract concept. And today's topic will change a lot of people's lives. I believe that, based on every single thing that you are seeing. Guys, look, every single week, the way we are going to structure the masterclass, if you pay attention in every segment, you will find every part of the segment highly beneficial. So one of them is not important than the other. That is why they follow every single thing, including even the affirmation video you watched before I came through. Everything is going to build you. You just need to pay attention. Today, what we are talking about, as I said, is the real truth, the real truth about trading psychology. And I've broken down this session or this masterclass from the psychology side into multiple different information. Number one, we are going to be looking at the neuroscience behind trading psychology. All right, the neuroscience behind trading psychology. Then number two, we are going to be looking at the dopamine and the reward system. And then number three, we're going to be looking at cognitive biases that destroy traders. All right. And then we're going to look at the psychological realities traders face. And then we're going to talk about why fixing your mind is the only way to survive in trading, not to make money in trading. Listen to this carefully now. I said this one time and a lot of people were like, but Cliff, I thought you said everything is psychology. No, I teach psychology so that you survive. To make money is a whole different entire conversation altogether. But you see, most traders don't have problem making money. They just have problem keeping money. And I love what Kema said so much. Keeping the money and surviving to trade another day is the issue. So, number one, we're going to be looking at the neuroscience. Number two, we're going to be looking at the dopamine and the reward system. And then we're going to be looking at why fixing your mind is the only way to survive in trading. And then practical steps to fixing your trading mindset. Ladies and gentlemen, welcome to class. Let's start with the neuroscience behind trading psychology. You see, understanding how, are you listening to me carefully now? Understanding how the brain functions under stress and decision making will change every single thing you know about yourself in trading. Let me say it again. When you understand the functions, you see, when we talk about trading psychology, it's nothing but you understanding what is a psychology in the first place. Psychology is the scientific study of what? Mostly your behavior. So it's a scientific approach to some level of understanding, okay? So one thing that you need to understand is this, is that your brain functions in a way differently under certain conditions of life. So the first thing we're going to be looking at in the neuroscience of your brain in trading, number one is the emotional brain. The emotional brain, we call that the amygdala. So the amygdala, if you have watched my previous videos before on certain master classes, I explained what the amygdala is, and you can even basically just bring it up on the screen right now. Let me see. Shells, can you try to Google amygdala? And then when you bring it up on the screen, I can use it to explain, okay? So one thing that you need to be able to understand is that the amygdala, okay, it is the emotional part of your brain. The emotional part of your brain is responsible for fear and greed. So I always tell people this. That is why when you see a chicken, you don't run, you smile. because your brain knows what chicken is. Chicken bring an emotional feeling of Christmas, jollof, all of that. Then when you see a lion, you start to run, because a lion also sees you as Christmas, right? As dinner. So your brain, which is responsible for the emotional responses, all right, have all these structure in place to make sure that it's able to capture a moment. So let's look at this one right here. This is the amygdala, all right? It is a small almond shaped. Do you guys see it right here? Thank you so much. Thank you so much for pointing that. So that is what we call the amygdala. That is the part of your brain that is responsible for emotional response. Does that make sense? That is what it is. I know you are trying to zoom in. Thank you. So that is what is responsible for emotional response. It's called the amygdala. So it's responsible for processing fear and greed. Number two, when it comes to you overreacting, all right, whether in high stress during trading or leading to impulsive decisions, the part of your brain that is responsible for that is the amygdala. Now, why am I teaching you about scientific thing? Cliff, how does this got to do with trading? You see, you need to be able to understand that at some point you need to know that your brain is going to have to be trained. You may have heard me saying this before, that if you pick up a military person and you pick up somebody who is a civilian, okay, so you have a military guy here and a civilian there, and the civilian comes to the military guy and say, hey, I want to become a soldier. That military guy is not going to put guns and ammunitions and all these things on the civilian. That civilian needs to go through a transformation process, all right, in order for the civilian to be called a soldier. So a soldier is not somebody who have access to arsenals. Being a soldier is a state of mindset. That means the same civilian who is just a civilian 5 years ago, 5 years later, we will call that civilian a soldier, not because that person had guns and ammunitions and arsenals and uniform, but that person now is being called a soldier because their mindset has been transformed from a civilian to a soldier. Something happened to their mind. So you are going to have to understand that the way that you were trained before you came into the financial market is everything opposite to who a trader is meant to be. And so you need to go through transformation. Now, these transformations, sometimes if you are fortunate, your experiences will likely bring you into a space of awareness that will help you to survive. But gone are those days where it has to take you 5 years, 6 years, 10 years, and you'll be like, wow, man, I was not profitable for 6 years. It's no more sexy because there is knowledge that you can actually sit down, train yourself, all right, get knowledge and become a trader. So the role of the brain in trading decisions, the first one is the amygdala. Number two is the prefrontal cortex. The prefrontal cortex is the part of your brain that is responsible for rational thinking. We can also bring that up on the screen. The prefrontal cortex, all right? It is a part of your brain that is responsible for rational thinking. So number one, you have your emotional part of your brain, amygdala. Number two, you have your rational part of your brain that is responsible for rational thinking, your prefrontal cortex. Now, the prefrontal cortex, let's see if you can bring it up on the screen later on so that people can see it. So now the prefrontal cortex, okay, it is part of your brain that controls logical thinking. Your logical thinking. Every single time that you see somebody who is not sane, all right, or somebody who is depressed, or somebody who does not feel like they want to do anything in this world, the part of their brain that is affected at that time is the prefrontal cortex. Now, you see, let me tell you one thing. This information that I'm telling you and this structure of the way the brain behaves is you, the retail trader, that you don't care about this information. Hedge funds and the big boys, they know all these things. So when they are developing algorithms, they don't develop it to say, hey, you know what? I want an algorithm that will make me money every day. They design algorithm that will play with people's mind, the 90% people's mind. Does that make sense? So you need to be able to understand that this information is not something that you basically just say, hey, I don't care. So this is the prefrontal cortex. It is a part of your brain, all right, that is responsible for rational thinking. So if this part of your brain shuts down, you can go into depression. Yes, you can go into depression just because your prefrontal cortex is no more active. Does that make sense? Now, don't worry, follow me. We are going to learn somewhere. So we started the conversation by you trying to understand that you are not bad. You are not stupid. Don't tell yourself that. You are not emotional. Yes, the emotions are there and I wish they were not there. But don't tell yourself these things. I am bad. I don't know. I am not disciplined. All of that is great. But you need to know you are wired. Okay? It's a wiring problem. You are wired. Your amygdala is wired. Your prefrontal cortex is under attack. It's under attack by the persistent things you see, you hear, the decisions you make, so on and so forth. So the neuroscientific part of the conversation today, number one, the amygdala. What is it for? Is responsible for your emotions. Number two, prefrontal cortex is responsible for what? Is responsible for your logical or your reasoning thinking. Number three is what we call the neuroplasticity in trading. This is the good news, ladies and gentlemen. Because of neuroplasticity, it means whatever you are not, you can become. Put it in the comment, good news. Say good news in the comment. Whatever you are not, you can become. You see, by the grace of God, the way God designed the brain, he designed it in such a way that the same way it can be wired, it can be rewired. Meaning, if you are not a trader yet, no problem. No problem. 100%. Become one. So there are three reasons why you need to understand the neuroscience behind trading. Number one, emotional responsibility or the emotional responses. Number two, decision making in the area of your prefrontal cortex, which is responsible for logical thinking. Number three, because of neuroplasticity. Now, neuroplasticity, because of that, there is good news and there is bad news. Listen to me carefully now. Listen. Avoid all distraction. Listen. Because of that effect of your brain, the way you start trading really matters. That is why, when Kamal was explaining his segment, he said something very interesting. He said that capital loss, and it went on and on and on to inconsistency and lack of confidence and all that, is because of neuroplasticity reasons. You see, your brain is so interesting that it loves to create habits. The reason why your brain loves to create habits is so that it could be able to borrow the habit it already knows to save energy. So if you started trading and you were over leveraging, and you made money, you have trouble now. Your brain is going to associate over leveraging as part of survival. So a lot of people start trading and there are things they believe that becomes part of their belief system. So what happens is it takes them a long time to get out of that belief. For example, somebody who have seen somebody flipping $100 to $1,000 or $2,000 in one day. It is going to be difficult for you to tell this person that thing will not happen to him. And even if it's happened to him, he is just lucky. It's difficult for you to tell somebody you can go through a whole entire month and it's possible that you have not really traded any assets that much that month. It's impossible, because what the media is showing people is every day there is trades. Every day you must make money. You can flip $100 to $1,000. So because we have heard this, our brain has captured that as the structure it wants to live on. So that is the bad news. The good news is you came on this call and I'm telling you, there is also a way to rewire your mind from being an unprofitable trader to become a profitable one. Does that make sense now? So 3 reasons why you need to understand the neuroscience behind psychology in trading. Number 1, your amygdala. What is that? It's responsible for emotional responses. Fear and greed comes from that container. Number 2 is because of your prefrontal cortex, the part of your brain responsible for logical reasoning. Now, you see, listen to this carefully now. The reason why I'm teaching you this, and I made the team bring on the picture, is because your brain is like a CPU. The screen may be good, but if the keyboard is not, something will still not work. You can have a Wi-Fi, you can have all the desires in this world to type on the keyboard, it wouldn't work. So your brain is an organ. Your brain is a muscle, not your mind. Your mind is the infrastructure, okay, in the system of your brain. You may have heard me explain this before, that we have structures and then we have infrastructure. A structure is something you see. An infrastructure are things you don't see. And infrastructures are powerful just like structures. So your mind is what you don't see. It is the infrastructure part of your brain. It is what is responsible for your belief system and your behavior. But these things I'm teaching you now, it is not the mind. What I'm teaching you is the brain. So your prefrontal cortex can be strong. Does that make sense? Let me give you an example perfectly. It's like being at a gym. This is my, okay, let me hide my biceps. So this is my biceps. This is my triceps. Okay. And in the triceps, we have the head of a triceps and we have different parts. We have the tail and so on and so forth. Now, this is my muscle. You can see it. But what actually really makes me strong still goes back to my mind. So you may even have the muscles and it may be tender. But if your mind is weak, this muscle may not be able to carry even 80 kg or 70 kg at the gym. Are you understanding now? The mind as an infrastructure is very powerful. So if I say fix your mind and fix your trading, I'm saying fix the infrastructure part. However, you need to understand there is something that needs to happen to the structure part, which is the actual brain. So when I tell you do 4-7-8 breathing technique, that one is not for your mind. That one is for your brain. Because when you breathe in and you hold your breath for 4 seconds and you breathe out, what you are doing is you are taking oxygen like a fuel into your brain. Are you with me now? So for example, all of these things has to be together. So people sometimes say, do we need to fast as traders? Oh, do we need to do this 4-7-8 breathing technique? All this, no, you don't want that. It's lack of knowledge. You see that? You see, majority of the hedge funds, they are managers, right? Majority of the managers of hedge funds, pension funds that manages billions of dollars. Ladies and gentlemen, majority of them are addicted to drugs. Majority of them are addicted to drugs because there is a way that they need to function to manage those amounts of money consistently. And some of them sometimes cannot bear the emotional state they have to go through. So when they are in that space, they go on drugs. Now that you have understood the role of the brain in the part of decision making and emotional state, the amygdala, every single thing, we're going to go to the next thing. The next thing we're going to talk about is the dopamine and the reward system. Please write it down. You see, the brain is interesting. It loves dopamine. You see, just like I was telling people sometime that you don't need to believe the things I say. Just do them. It will create the belief system. For example, you are on this live stream right now and you don't feel like smiling. Okay, you don't feel like smiling. You don't feel like smiling. And I'm like, why don't you feel like smiling? And you go like, oh, okay, it's because I'm not happy. We are going to do something right now. And I know a lot of people wouldn't do this right now. But I want each and every single person to do this. It doesn't matter wherever you are, whether you're in the studio, you are at the back office, you are in your bed, do exactly, because I told myself, trading psychology on these master classes are going to be beyond an abstract concept. We are going to be doing something right now, okay? And what we're going to be doing right now is we are going to be repeating something after, I'm going to give it, let's say 3 minutes, okay? 3 minutes. Shells, I don't know how we're going to do it. Just set timer 3 minutes. Let's just take it out from. It doesn't have to come on the screen. It can be a timer, and then we take it out from there. So, guys, in the next 3 minutes, okay, in the next 3 minutes, we are going to be doing something. Cliff, why 3 minutes? Because if we can do it for 60 seconds and your body will not respond, you can do it for 2 minutes and your body will not respond. These things are not things Cliff wants to do. They are the way life works. Okay, so in the next 3 minutes, we are going to be repeating one thing. It's as boring as you can imagine, but I promise you this. When we are done, I want to take testimonials in the comment. 3 minutes. All that you're going to do is to repeat this after me. I am great. I am great. I am great. I am great. That is all that I want you to do. And then when you repeat I am great, I will tell you, switch it up to I am happy. I am happy. I am happy. That is all we are doing for 3 minutes. So in 1, 2, 3, let's go. I am great. I'm doing it with you. I am great. I am great. And I want you to believe it. I am great. I am great. I am great. I am great. It may not have to, just keep on saying it. It doesn't have to feel good now. Just do it. I want to show you something that will change your life this evening. I am great. I am great. But Cliff, why do traders need to do this? Just believe me on this. I am great. I am great. I am great. I am great. Now let's switch to I am happy. I am happy. And while you are doing that, I want you to start showing your teeth and then widen the corners of your lips and say, I am happy. I am happy. I am happy. I am happy. I am great. I am great. I am great. I am great. I am happy. I am happy. I want you to start even just moving your hands saying, I am happy. I am happy. It looks crazy. It looks stupid, but just keep on doing exactly what I'm telling you. And at the end of the day, you will be surprised that today someone's light of understanding what this means has come. I am happy. I am happy. I am happy. I am great. I am great. I am great. I am happy. I am happy. You don't need to feel it to say it. Just say it and you will feel it. This is psychology. I am great. I am great. I think we have like 1 minute, 30 seconds to go. I am great. I am great. I am happy. Cliff, I don't feel like smiling. A smile is not a feeling. Just widen the corners of your lips and show your teeth. I am great. 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 Oh, I am great. I am happy. I am happy. I am happy. I am happy. I am great. 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 I am happy. I am happy. I am happy. I am happy. We have 30 seconds to go. Come on now. Just let your body know that you are happy. Even when your body is telling you, but don't you know you are hungry right now? You have not even had anything to eat. Say, I am happy. I am great. I am excited. I am happy. I am happy. 10 seconds to go. Let this part be the part where you just shake it off and just say, I'm happy. I am great. I am happy. I am happy. I am happy. Now, ladies and gentlemen, listen. Your body is responsible for receiving chemicals. The same way when you are frowning your face, your body sends wave and chemicals of cortisols get to release in your body. Now, in that moment, you don't have a choice. I want you guys to put in a comment right now, those of you who really did it and they didn't feel like, oh, what of childlike this and this. Yes, you see, let me tell you something here. Poverty does not play. Poverty doesn't care if it makes you look like a child. Poverty doesn't care if it makes you look stupid. Poverty will attack you hands down. Same way when you are doing things that will make you financially free. Don't care. Charge yourself, okay? So let me know in the comment how each and every single person is feeling. Now, it's called the dopamine and the reward system. Listen, guys, I made us do this so that you will understand that your body must receive chemicals to behave. So whether if it is a stress chemical or a stress hormone called cortisol, when it comes into your body will react to stress. So, Cliff, what do you mean? If you are hitting stop losses and then you are always frowning your face, your body will believe that you hate stop losses. And if you hate stop losses, your body will always react by releasing stress hormones into your body. And when there is more stress hormones in your body, you will act according to stress. So, Cliff, what are you saying? Anytime you hit a stop loss, I don't want you to frown. I want you to smile. Why? Because you are training your brain because of what? The neuroplasticity effects of your brain, which have the ability to be trained. So, about Cliff, what do you mean? Listen to this carefully now. Stop celebrating only just take profit. As a student and as a trader who is back testing, celebrate the number of trades you were also able to stop. Call your stop losses good stop losses as well. Don't just celebrate take profit. So the day that you hit TP, good. When you hit stop loss, good. Both of them must all carry the same facial expression, smile. If one of them is a smile and the other one is a frown, you are creating a problem for yourself. Why? Because of the reward system of your brain. Are you with me? Let me drink water. I didn't realize how much far I was going. If you guys are hearing me, just drop some months in the chat if you're learning. The next thing we're going to be talking about right now, before we're going, let me go into the comment. Okay. I was feeling cold, but now I have removed my jacket now. Okay, so I can see, wow. Guys, listen, this is trading psychology. Welcome to class. Okay, now let's talk about the next thing. The next thing we're going to be talking about is what we call the cognitive biases that destroy traders. I'm not going to be able to talk about this. We will talk about cognitive biases as a whole in our next segment, okay? So let's not really talk about cognitive bias as a whole. Me and the team will talk, me and Kema will make sure that all our teachings are always aligned with which edge goes with which psychology. We'll talk to you guys about that so that you guys will get the right conversation here and there. So we're going to be talking about psychological realities traders face. Let me talk a little bit about cognitive bias. You see, cognitive bias is so now you have understood that your brain is an organ and it behaves in a certain way that is trained. Now, your brain, whether it is a strong organ or a weak organ, you need to understand something, that both of them has its own side effects. But there is something in your mind. The cognitive biases now is not a problem of a structure. It's a problem of an infrastructure. So, okay. So right now, let's say you leave this call right now and you are trying to judge us, okay, as a team and say, oh, this thing was no good, that thing was no good, or this and this and this and that. What is happening right there is your cognitive bias that is just judging. You may be right, you may be wrong, but that's not the point. It is still your own bias. So in trading, one of the things that I want to talk about is loss aversion. Now, loss aversion is something that I'm gonna share my screen right now and talk about loss aversion. Let me bring the whiteboard so that I will let the team bring it up on the screen so that we'll explain loss aversion to you. I'm trying to share my screen, but it's coming. Give me a second.
Trading is a mind game, you heard me?
All right, now, so let me share my screen and we take it out from there. So one of the things you guys need to understand is this. Number one, you need to understand this. Where is it again? Whiteboard. There you go. Now listen, guys, this is loss aversion. It's the most common problem in this whole entire industry, that except you grow out of this. So loss aversion is when your desire to not lose, I'm making the English very easy. When your desire, come on, I hope my English is good. Okay, anyway, when your desire to not lose is greater than your desire to gain. This is loss aversion. So this is loss aversion to gain. Desire to gain. Okay, this is a definition of loss aversion. It happens to people all the time. Now, nobody wants to lose, right? Nobody wants to lose trading. So what happens is that, check this out. Let's say this is the market. It's creating all these things. It's creating all these things. It's creating all these things, so on and so forth. And then wick here, and then voila, back to this area here again. Classical hunting. Okay. So now you took a buy from here. Okay. You probably want to take a buy. You went to the smaller time frame. You want to take a buy. Now, when you took this buy, let's just say, for the sake of this conversation, you took this buy and then it started coming here. Okay, I'm just using this as an example. So this is your entry for a buy, because when it came here, some people, you were not patient. So you took a buy and the trade started coming down on you. Your stop loss was meant to be here. But you see, you have already removed the stop loss, thinking that the trade must at least go back again, even if you were even buying the dip. So entry number one, and then stop loss here. And then stop loss there. Okay, so now the market decided to push down, you remove your stop loss. And then you even wanted to buy another dip here. You entry two. hoping that this will go. So this one doesn't have a stop loss. This one doesn't have a stop loss. Now, why does this thing happen? It happens because of conditions, whether your mind, the way you behave, your hopeful system. There is too much hope in you. You are a believer. That is a good one. But unfortunately, it's principles here. So now, number one, entry number two. Now you remove your stop loss. Remember now. Because why? You didn't remove your stop loss because you believe in the analysis. You remove your stop loss because you don't want to lose. So it kept on going. And then it kept on going. And then now you are angry. Okay, check this out. Now you are so angry that you don't know what to do. But then the trade started reversing. It started reversing back to your entry. Now, listen. The moment it reversed to your second entry, instead of your brain telling you, or instead of your understanding saying, hey, listen, you know what? You better close this trade. Does that make sense? Hey, you know what? You better close this trade. Your brain is not going to close this trade. What it's going to do is it's going to believe that this will somehow move all the way here, come here and go hit your TPs over here in these levels. This one right here is called anchoring bias. Anchor bias. This is the type of bias that you get so hooked up on your bias that you forget that this can also be a pullback and a continuation again to the downside. But you see, this is what happens. It moved all the way to this area here. You didn't close it. You could have closed this and close that and have at least safe side and come back again and try again. But you see what you're going to do? You're going to just believe, oh man, finally it's reversing. Then you will now go and even message come on, bro, what do you think? Go looks like a buy, yeah? And come on, be like, I don't see it. It's not ready yet. I think it will really do this. Kema, he will give you a well-detailed reason why gold is not buying yet. But then because of confirmation bias, what you're going to still believe is about Kema, if you look at the 15 minutes, it looks like he's doing. So you want to convince Kema, all right, to basically just believe what you see so that you can sleep at night. So while it reverts to this area here, what happens? You now go and either cook, bath, maybe go play some game so that by the time you will come back to your chart, you will be surprised, right? You want to be surprised. You want to see blues so that you will send a picture to that friend that didn't believe in you. But by the time that you will come back again after cooking or doing whatever, you will see this. Now, this is where now people become, you know what? I don't even care. If this will blow, let it blow. If this will blow, let it blow. Shells, I want you to Google. Okay, no, don't worry. Let me Google it myself. So let me show you guys something now. It's called. So this is where people say, hey, you know what? If it will blow, let it blow. And the sad thing is it will blow. There is no account that has not blown like that. It always blows. I don't know how, but it always blows. Look at this one right here. This is called the psychology of market cycle. The psychology of market cycle. Every market in every cycle start from majority of the time disbelief, then hope, then optimism, belief, thrill, euphoria. Now, majority of the people will always either buy from here or buy from there because of fear of missing out. Then when it pulls back, they are now getting, oh my God, I'm going to lose. And then when it starts to go up a little bit, they're like, oh, finally. So this is where I'm trying to explain to you. What I'm trying to explain to you is the euphoria and the complacency part. So you think, oh man, finally it's going to reverse. And then boom. So now when it's now dropping again, now anxiety, denial. Oh man, you know, I don't even care. If it will blow, let it blow. Instead of you closing the trade, you're going to tell yourself that. And then you panic. All right. And then now you are trying to basically save some capital. And then what happened next is that, you know what, anger, you are like trading doesn't work. You know, this signal providers are even fake scammers. You are now angry and then depressed because you lost all your money. Then you come back again to this belief stage. This is the market cycle, the psychology of the market cycle. And a lot of people every single day, regardless of how this looks, we still come back to this place again. Why? Because of the way the brain is trained. Okay. Now let's continue. I hope you guys are learning. All right. I hope you guys are learning. Come on, you are still there in the studio, bro. God bless you, man. All right. So, I'll bet you're also in the studio. Thank you so much, guys. Okay, so basically, listen. So now, Cognitive biases that destroy traders is what I just shared with you. There are many of them. There is confirmation bias, there is loss aversion, and there is overconfidence. Now, the next segment we're going to be talking about to wrap up now is what we call the psychological realities traders phase. Now, listen, there are 3 of them. Number 1 is fear of missing out. These are the top emotional triggers in trading. Please write it down. Whether you have started trading now or not, please write this down. Emotional triggers in trading, top 3 of them I'm going to give you. Number 1 is fear of missing out. Fear of missing out is one of the most dangerous emotion in the game. Do you know what fear of missing out does to people? It causes poor entries. That's it. Fear of missing out causes one thing and one thing only: poor entries. Poor entries. Poor. Poverty. Poverty. Never mind. It doesn't mean anything. Poor entries. So fear of missing out causes poor entries. That's it. The second emotional trigger in trading, the number 2, is revenge trading. These 2 things, dangerous combination. Imagine you are afraid to miss, so you entered in a bad place, you lost a trade, and you are angry on top of that. Do you know what the market will do to you then? So fear of missing out, number 1. Number 2 is revenge trading. Number 3 is impatience results in premature exit. This one now is a spirit. And do you know what happens to people like this? Premature exit, is the same as stop loss. The feeling it gives you is the same as a stop loss feeling. That you know this thing will go to 300 pips. You only took 20 pips because of last week loss. So you took only 20 pips and you started getting notification from your trading view. All targets hit. Now you are not only just angry, you are also going to be impatient. Because your brain is telling you, why didn't you take all this profit? When is the trade even going to come again? Meanwhile, let's say Kema has taught you about patience in edge. So you know Kema's strategy. Sometimes, 2 days that Kema is still waiting. So imagine if Kema is your mentor and you didn't take all the profit, right? So now you need to wait for the right, because his trades, if you wait for the right trade, he will hit all target. But you gotta wait. Now, you didn't take all the profit because you are afraid of the losses that you had last week. Now you don't have patience. Now you didn't take all the target. You are in trouble now. Fear of missing out, number 1. Number 2 is what? Revenge trading. Dangerous emotional individuals. Number 3 is impatient results in premature exits. Now, we have something called illusory correlation. In other words, the illusion of control. This one here is one of the biggest problems. Why? So what are we talking about today, guys? Stay with me. We are still talking about the truth, the real truth of trading psychology. Why it's important. The next thing I want to talk about, the psychological realities traders face. Number 1 was the emotional triggers in trading. Number 2 is the illusion of control. You see, many traders believe that they can control the market. Big lie. Whoever told you that is a big liar. You cannot control the market. In fact, you don't want to even control the market. Do you know what it means? Anyways, so many traders believe that they can control the market, but all the time it proves otherwise. You need to accept uncertainty to be part of this industry. You need to accept it as it. Okay? Let me ask you something right now. Let's say if you have a coin. Today, when we went to the meet and greet in Dubai, had an amazing time with new traders that I've never met before. They came through. And when I met them, there was a conversation we're having then. And it was about coin toss. When you flip a coin 100 times, all the 100 times will never be head, 100 times. There will be head, there will be tails. There will be head, there will be tails. Chances are excellent that it will be 50 heads, 50 tails, or 60 heads, 40 tails, but it will not be the same throughout. Same thing with trading strategies. You will not win, right? But let me ask you a question right now. Is it possible that you can flip a coin twice and get 2 heads? Please put in the comment right now. Is it possible that I can flip a coin right now? I wish I had a quarter with me right now. Can you flip coin twice and get 2 heads? If the answer is yes, then that means you can take 2 trades and have 2 losses in a row. If trading is a game of probabilities. But you see, because of our illusion of control, always trying to be in control, we take it to the market. So we need to understand that the market is full of uncertainty. So because of your cognitive biases, even if you have 100% winning ratio strategy, it wouldn't be 100% winning ratio strategy because you as the human being, you don't qualify to be 100% decision maker. That is why you can buy a brand new car and there is nothing wrong with the car and you can still have an accident. God forbid. But it is true. Not because the car is bad, but because of human judgment. So Cliff, does 100% winning strategy exist? Maybe. But does it exist in the hand of a man? No. Why? It's not possible because of your cognitive biases. So number 2 is because of illusion of control. Number 3 is why emotional discipline is more important than strategy. Listen to this carefully now. I didn't say strategy is not important. It's why emotional discipline, because emotional discipline and the strategy goes hand in hand. If your emotional discipline doesn't exist, your strategy wouldn't work. Because it is your emotional discipline that will tell you it's okay, stay away from the market. Does that make sense, guys? So 90% of traders fail not because of lack of technical knowledge, but because they don't have emotional discipline towards their edge. That's it. Now, why fixing your mind is the only way to survive in trading. Guys, I don't need to talk about this anymore. You know why now. It helps you to be disciplined, emotional, intelligent. It makes you to be able to follow your system, your edge, every single thing. That is why. It helps you to even survive while you are growing. Now, what are the practical steps? I'm going to give you 1, 2, 3, 4, 5 practical steps that you need to use to fix your trading mindset. Now, every single thing we have talked about now is like an introduction to trading psychology. We're going to be picking all of them one by one on the masterclass. 1, what is emotional control or emotional intelligence? 2, cognitive biases. 3, what are the different types of practical ways you can actually fix your mind? 4, what are the realities that will hit you and what do you do in that moment? Okay. So now write down the 5 practical ways of fixing your trading mindset. 5 of them. Number 1, daily affirmation and visualization. Cliff, doesn't matter. Yes, you should know this by now because of you understanding your brain as an organ. Now, every single person that believes in affirmation now, you will never ever look down on it anymore. Daily affirmations and visualization. Daily, daily, daily. You need to train your subconscious mind. Your subconscious mind needs to become positive. Some of you guys right now, you are afraid. You are afraid, what if I take this trade and it doesn't win? You are afraid. You are still afraid. You are afraid you will lose. The good news is you will, but you don't have to blow your account. The bad news is you need to accept uncertainty, but a lot of people don't want to accept that. So daily affirmations and visualization is number 1. Number 2, mindfulness and emotional regulation. Mindfulness and emotional regulations. Mindfulness and emotional regulation. I want you to see emotional regulation like your room thermostats, like the thing you use to change and control the temperature in the room. That is how emotional regulation is supposed to look like. We'll talk about all these things. I just want you to list it down like a foundational knowledge, okay? Number 1, daily affirmations and visualization. Number 2, mindfulness and emotional regulation. Number 3, journaling your trades. There are 2 types of journals you need to have. 1, technical journal. 2, emotional journal. 3, hybrid. Let me say it again. 1, your technical journal. 2, your emotional journal. 3, your hybrid. The hybrid is the one that you combine both technicals and the emotional one together so that you can spot a pattern. One of these days, I will show you how a typical journal of an emotional trader looks like, okay? So number 1, daily affirmations and visualization. Number 2, mindfulness and emotional regulation. Number 3, journaling your trades. Number 4, accountability partners. Oh boy, this one is a big one. And that is why even in our community right now, guys, I was talking to Kema about this and I said, Kema, we need to hold people accountable. And he said, Cliff, you have no idea. I was literally thinking about this as well. So there is going to be a whole entire system that hold traders accountable. You guys will love it. I think I already told you guys even as well. Accountability partners. You need an accountability system. You cannot trust yourself. I have a video whereby Malimo and I were talking, and he said, yeah, Cliff, you cannot trust yourself. As a trader, you have to have a ritual. Number 5, the last one, is regular self-assessment. Regular self-assessment. Let's say the whole of the entire of this week, you have maybe entered into a space of how you enjoy, maybe let's say Benku. Okay, if you're a Ghanaian and you like Benku so much, and the whole of Monday to Friday, all you are eating is Benku, you have to be careful now. Because if you're not careful, you would think that is a break-off structure, but it might not be. So daily self-assessment is very important. All right, if you're eating too much of a bar, okay, you have to be careful now before you trade. I don't, hey, listen, I thought I saw break-off structure. Oh, I thought this was an imbalance. No, it's not. The actual imbalance is in your stomach. So you need to understand that anyway, let's come back now. Regular self-assessment is very important. It helps you to understand, last week I was performing well. What changed? This week something is off somewhere. So number 1, daily affirmations and visualization. I will really pick up this as a topic to really break down what daily affirmation and visualization looks like. Number 2, mindfulness. What is it to be? When you say mindfulness, what does it even mean? We'll talk about that. Okay. And then the journaling, proper journaling masterclass, and then accountability partners, and then regular self-assessment, and so on and so forth. Ladies and gentlemen, this is our very first structure of the masterclass. God has granted us the grace to create. And I don't know where this will take us in the next 2, 3, 4 years. And Kema, officially right now, as I said, everybody wants you here. I want you here, bro. The whole TP family loves you. And I love you too, brother. Albert, thank you so much as well. And I think right now, some of the things that, if you don't mind, I would like to bring your, where is Albert again? Albert, can you share a screen so that people can take a screenshot of, Kema, do you mind? Okay, I don't want to worry you too much, bro. We'll talk about it again and we'll see how it goes from there. Okay, so again, if Albert, your screen is here, I would like people to take a screenshot to know the markups you did. We will talk about the journaling. Don't worry, guys. Also, guys, let me get you guys your feedback quickly. So this is the structure of the masterclass now. There is going to be different segment before even the psychological side. Is this something you guys like or you want? 64 people on this live stream right now. Can we all drop something in the comment if you love this structure we are about to create? Now, listen, guys, we are not perfect. We are starting now. You can tell we have a limited team right now, and we are trying to do every single thing to make sure we bring you guys the best experience. But I'm praying and I'm hoping this is something that you enjoyed. If you did, please put something in the chat. It can be number ones, whatever, to let us know that you guys want us to keep on doing it this way. So now you understand that the markup overview is for you to know what you're looking at. And then the edge is for some of you to really build your strategy structure very well. And believe me, I couldn't have chosen the right person than Kema. An amazing, amazing individual that I respect so much in this industry. You know, it's not because he's here. He knows this. I sent him voice note. In fact, when yesterday he wished me happy birthday, I told him how much I have so much love and respect for him. So this is not just some few people just trying to pretend. No, guys. This is real love, from TP family. So I'm glad you guys like this. I don't know where Albert is, but it's okay. What we will do is we will let you, we will share, and then we'll basically bring it to you guys. Guys, with that all being said, let's see. Okay, so absolutely love this. Thank you for this session. God bless you. So guys, this is going to be how the session is going to be every single Saturday. Same time, 6 p.m. UK time. You don't want to miss this. Okay, this is going to be an amazing session, and I believe that you guys will grow and grow and grow a lot. We'll grow and grow a lot in this space together. So tell a friend to tell another friend that every single Saturday there is a new structure of a trading masterclass happening right here, featuring the highest. Hey, let me correct it well. Yes, the highest, God the highest, and then also Kema also as well. Thank you so much, guys, for the birthday wishes. I really, really, really appreciate you guys all. God bless you all so much, and we will see you guys next week as well on this masterclass. Make sure you share this. Take a screenshot right now. Share it. Tag. Okay, guys, can we do something before you go? Please, 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 please. Can you take a screenshot of this masterclass? and then tag us on our social Instagram. Tag. Let people know that there is a structure of a masterclass happening, and then people can actually really enjoy this. So tag. Take a screenshot right now. Tag. So that I'm gonna bring Kevin on the screen right now. Broski, I want them to take a screenshot or whatever right now. Let them tag. Let them tag right now, and then we'll take it out from there. So guys, tag. It was an amazing session. I really loved it. But we will try and do better and better, guys. What you are seeing here, the next couple of few sessions ahead, it wouldn't be just like this. We're going to keep on growing and so on and so forth. So with that all being said, guys, thank you so much for every single thing you keep on doing. God bless you all and have an amazing evening. God bless you. Bye-bye.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game. You heard me. Trading is a mind game. Fix your